Hi there, everybody. This is Stephen Gardner, best-selling author of A Bridge Over Troubled Wall Street. And I wanted to share one of my recent articles with you. I'll make sure that there's a link attached here in YouTube, but I wanted to go through something that I think is really important. As people prepare for retirement, what they start realizing is that there are many obstacles that stand between them and walking away from work for 15, 20, 30 years. And so although I won't be able to cover all of them and each individual has their own journey, I want to talk about 3 hurdles that if we cleared them off your path, getting to retirement would be simpler, and during retirement things would be easier. So I want you to imagine a race between 2 incredible racers. One of them just has to run from start to finish. There's nothing that stands in his or her way. And then the other one has the exact same distance, same level of talent, but every 10 feet they have to jump and clear a hurdle. And so just as they're getting up to speed, they've got to stop, plant, jump that hurdle, and 10 feet later they've got the next one. Now, if you had to bet on this race, are you betting on the person that has hurdles in front of them every 10 feet? Or the person who has cleared the path and just has to focus on running, right? You would go with the person that has got the hurdles out of their way. And so I want to talk about 3 main hurdles today: taxes, market loss, and liquidity. And so the first one, if we can clear taxes out of your way, your retirement, I promise, is going to be so much better, right? Taxes are one of the most expensive things that we experience in our lifetime living here in America. There are over 100 taxes. It seems like anytime a dollar moves, you get taxed, right? So imagine if you had the control to remove taxes from your retirement nest egg. It doesn't mean that you won't have taxes. There's always going to be taxes. And whether they're going to be really high or really low, I have no idea. That has to do with the economy and the president. I just know that they're going to be there. And so if there were a mechanism to remove taxes, wouldn't you want to do that, right? Imagine having $1 million in retirement and yet 300 to 400,000 of that still belongs to Uncle Sam. You would not really be a millionaire. So let's clear that hurdle outright. There's only 3 places where you can truly grow your money tax-free: municipal bonds, Roth IRA, and a life insurance plan. There are other variations of this that give you tax advantages, but these are the big 3. And so if you could eliminate those taxes, your retirement is going to be so much better, right? The United States tax code is over 70,000 pages long. It might be the longest book in the world. And so as you work with a CPA, their job is to help you save taxes today, not in the future. Because if they don't save you tax today, they run the risk of you going to a different tax CPA or a different tax attorney, right? And so they're not really built to design your future. They're not designed to help your present. But in the future, you're not going to be working, and so every dollar will count. You've got to beat inflation. You've got to beat taxes. You want mailbox money that shows up so that you don't have to worry about money, right? So let's eliminate that altogether. The second one is market loss. The thing that's tricky about market loss is you never know when the market's going to drop. And if you could predict that, you would be a gazillionaire, right? But you can't, right? We don't have a crystal ball. We don't have an almanac that came back, from the future, like in Back to the Future 2 or something like that. We don't have that. And so the best thing that we can do, the top money people, the very first thing they look at is not ROI or how much they're going to make. The first thing that they look at is how do we protect the downside? And then once that's protected, then they look for the upside, right? And so we need to look at that as well. It's been said that compound interest is magic, right? Some people call it the 8th wonder of the world. But compound interest is only magical and only the 8th wonder of the world if it is uninterrupted. As soon as you interrupt compound interest, it loses its magic. The sizzle goes away. And so having market loss, not only does it interrupt that compounding effect, but you actually go backwards, right? Imagine you're climbing a mountain and then all of a sudden you slide backwards, right? You can't really get that critical mass that you need in order to benefit from compound interest. So there are programs out there that protect your downside, and they grow every single year. No sliding backwards, no having all that compound interest beauty erased from you in a short period of time. You just slow and steady, right? Slow and steady. We're in one of the longest bull markets we've ever been in. Typically, the market has had a major drop by now, which is cool, but it's also very scary. It means that there is something big coming. But I have no idea when it will come, and neither do you, most likely, right? So we have to protect that downside. The last thing is liquidity. Unfortunately, since 2007, banks have left us with instruments that only pay low interest, right? So we're buying the freedom of liquidity with very low interest rates. And so in order to counteract that, people have gone into the market. They've taken risk in Wall Street that they can't afford to take because it will provide liquidity, and they want to beat inflation, but it also comes with that risk of sliding backwards. And so we need something that provides liquidity but also allows us to grow. And you can only get these kind of programs with banks and insurance products that provide the liquidity but also provide the protection, the guarantee, the FDIC, the claims paying ability of an insurance company, right? So these are the three major hurdles that we have to just completely get them out of our way, right? So that we can move forward with confidence, right? Confidence comes from your ability to produce income, not your ability to be a great investor. Most Americans are better savers than they are investors. And so if we can focus on the saving element and then put it to work with companies that have a long track record of actually growing money and protecting you from ever losing any money, that's what we want to do. Okay, and there are programs out there. I'm happy to show them to you. There's many programs. You're not going to hear about them on Wall Street, and you're not going to hear about them from the bank, because as soon as they educate you, you become a competitor instead of a customer, and they need you to be a customer. So I'm willing to show that to you. I hope this video has been helpful. If I can help you in any way, check out my website, yourbridgeplan.com, or feel free to reach out to me at Stephen with a PH at yourbridgeplan.com. Otherwise, thanks for checking out today's video.